Hello and welcome to this edition of the weekly video market update from Orbex.com, and Ramadan Kareem to all of you out there. The most important events of last week were, of course, OPEC meetings, in addition to the notable revision of the US GDP, which had the biggest impact on the market at the end of last week, which also raises a lot of questions. However, let's start also with OPEC meeting. Despite the fact that the producers decided to extend December's deal to cut the production, or to cut the oil production for 9 months instead of the 6 months that everyone was talking about it for the past also few months, crude oil prices tumbled by more than 2% last week, even though it recovered a little bit on Friday and also on Monday, but the prices are still nowhere near the high of this year. This is what also we were talking about for the past few weeks, and that traders need to be aware that the deal is already priced into the market. Moreover, December's meeting or December's deal basically failed to push the prices even higher or above this year's high for the past even 6 months. Therefore, the extension is unlikely even to give us a huge boost or a huge move or any huge push ahead. In fact, the prices or the price movements right now is giving us also some hints that the prices, in order to let the price to go higher, it needs deeper cuts and not only an extension. However, since there is also no rally, don't expect also OPEC to hold off and to watch crude oil prices declines even further. They will also do whatever it takes to keep the prices above this year's low at least. Therefore, expect the producers from OPEC or even non-OPEC to remain very active through the media over the coming weeks and months, especially if the prices fail to stabilize at least at the current levels. Moving forward to the US GDP, the second estimates showed a huge jump of 1.2% instead of the initial reading of 0.7% of growth. But looking deeper into the numbers, we can also say that the healthcare sector was one of the biggest losers of this quarter, or the first quarter of this year, while the non-profit organization was the biggest contributor, which also means that such a revision might be only or temporary only. Yet, the GDP also for the first quarter is still the weakest in over a year. It is true that the US dollar also rebound on these data, but at the same time, the trend of the downtrend is here to stay with a possible short-term retracement to the upside before the trend resume, which also we will talk about it later in our technical chart. As for the week ahead, Monday, definitely everybody knows that most of the banks are closed across the board, and that's why we saw a very lack of fundamentals and a very also lack of volatility and even liquidity across Europe, Asia, and also in the States. But on Tuesday, we'll be also waiting a collection of inflation data all over Europe, in addition also in the States, which may have only a medium impact on the markets. Wednesday is also expected to have some key data also from the European Union, especially the inflation data, which is the CPI and the core CPI on a year-over-year from the European Union, and both are expected to show some slowing down. Thursday and Friday might be or are likely to be the biggest days of this week as we wait for the ADP non-farm employment change, and the US jobs report will be released, of course, on Friday. The estimates are somewhat encouraging. The ADP is expected to add 229,000 in new jobs in May, while the non-farm payroll is expected also to come softer than before at 186,000 compared to 211,000 last month. Unemployment rate is expected to remain unchanged at 4.4%, but the most important index again, and once again we say it, the average earnings index, which matters the most in this report. These are the most important figures that we'll be looking for over the next few days. Stay tuned, as we will be publishing, of course, our daily fundamental report on Orbex to get the latest, also the latest, especially on a daily basis, on daily basis from fundamentals point of view, in addition also to some technical charts. So that's in terms of the fundamentals for the time being, and now let's have a look at some of our technical charts. Beginning with the US dollar index, as I said before, we continued actually to decline all the way back to 96.80, and since then it's been like flagging all the way back higher, like 97.34. But at the same time, that's actually one of the support area that actually was on our radar, the one that we talked about it last week from the previous or in October, the lows of October of 2016. At the same time, the good thing is that technical indicators right now is heavily overbought and crossed over to the upside. This basically would give us at least a sense that there would be some sort of a retracement to the upside before the trend resumes. At least, I guess, for the time being, that one of the main things that we'll have to keep an eye on is basically the 98 to 98.20s, 98.30s, which is the broken down trend line of the channel, the one that we saw for the past, well, since the beginning of the year at the same time. So that's probably, we might see some sort of a retracement all the way back to 9820s before the trends continues. On another note, if it failed also even like to go all the way to retest that level, I guess the next level would be 9680 once again, in addition to that 9617 before any upside retracement ahead. Going into also some of the technicals charts in terms of starting with New Zealand and the Kiwi and the Kiwi and the Aussie. The Kiwi and the Aussie continued also to trade within the same tight range. There's nothing new in terms of those two pairs, especially the Kiwi and the Aussie. The Kiwi last week tried even to break down below the 100-week moving average. It failed to do so, and it continued all the way back higher. So the weekly close was probably was positive, and at the same time, it continued also to trade below the recent highs, or below the recent resistance, which is like almost 17 or 70.93. At the same time, the 50-week moving average remains also very solid at the same time, which is 71. I don't expect some sort of any huge uptrend from the current levels, and likely to stay within the same area between 68 and 70 until further notice, because there's no, right now, the most important thing for the New Zealand, or the Reserve Bank of New Zealand, to keep the currency stable as much as possible. The Aussie also continued to trade when it was like underperformed the Aussie, or the Aussie underperformed the Kiwi. It tried to break higher last week, but ended up the week even lower on more and more negative economical reasons from Australia. At the same time, we're still continue to trading within the same tight range between 50 and the 100-week moving average. I don't have like any much comments on those two currencies, especially for this week. But technical indicators suggest like we might see another test of the 50-week moving average before the downside trend continues, or the sideways trend continues back towards 71.58. Going into the euro. The euro continued also to rise all the way to 12.56, the level that we talked about last week, which is the previous highs of September of last year. And since then, we've been declining just very, very gradually at the same time. Technically, the indicators are suggesting that the downside retracement has just started and likely to continue. But at the same time, it looks like that any downside retracement is likely to be very limited, as long as it stay above the 106 40s, which is a trend line in here. At the same time, the gap that everybody's talking about it, and we were talking about it also at the same time, is unlikely to be filled as long as the euro continues to trade above 108.60, 108.65. That will be the level we can watch it. But for the time being, as long as, again, the 110.65 remains solid, I don't think so there will be any kind of any downward pressure, while I'll be looking to buy once again the euro all the way back to 113 or even 112.50 and 113.50 in the coming days, in the coming weeks. The British pound also finally last week, or at the end of Friday, we continued to decline all the way back down, testing the lower band of the uptrend channel. However, this was due to the political news in the UK. Number one, number two, also it's one of the main reason about that, because of the public polls that it shows that Theresa May is losing a little bit of steam, but not that much. But at the same time, we have to watch that actually the Monday was a little bit with lack of fundamentals, lack of liquidity. So I would stay and wait to see what Tuesday is going to come up, whether weekend is going to be a breakdown, or just another test to the trend line before the uptrend continues. At the same time, still, as long as the British pound continues to trade above one of those two levels, which is 126.60s or even the 127.30s, as long as it stays above those two levels, the bullish outlook is here to stay until further notice. Dollar yen continued also to trade within the same area, within the same trend line, below the trend line, and it looks like we might see a breakdown later this week, especially after last week fake breakout and breakdown all the way back lower. I still suggest we might see another breakdown all the way back to 109.95 later this week. Today it was just again it was a very sideways since the beginning of the Asian session until today, until the US session, and I still believe there's probably a chance to retest to 109.95 later this week. Going to gold and silver, which is one of my favorite charts, the one that we talked about last week. Again, despite the fact that the trend was down and the trend was broken, it finally made it all the way back higher, and closes last week above the broken trend line, which basically proves that gold is still, for the timing, it is still very strong. And here we have even like some sort of a flag, which I believe right now, let's take the ray off. The flag is pretty it's pretty positive, and it was actually pretty clear. So I guess right now from the current move, that would be a very positive move, despite the fact that again technical indicators are heavily overbought. We might see some sort of a retracing, but the next level to watch would be again the 1275, and also the high of the year. The one that we will be watching is also around at 1300 or 1295. Silver is still did not actually prove itself as much as gold did, but at the same time we covered like almost like 50% of the recent decline here. I still need to see silver above these $18 in order to say that silver proved itself that it's very strong and has the potential to keep on rallying. So this is it for today. Thank you for watching this weekly video. Again today, please subscribe to Orbex channel. Also share this video on your social media platform if you like it. At the same time, and as always, if you have any questions or feedback, please leave them below this video on YouTube, and I will try to answer them as soon as possible. This is it for this week. Ramadan Mubarak to every one of you, and I'll see you once again next week. Have a good day.